All right, this is James the Giant Economy, where we talk about real estate, energy, interest rates, the dollar, BTC, Bitcoin, and insurance, and anything else that's on my radar. I hope you guys are having a wonderful Sunday night. We're just going to jump into it. This is after hours trading. Oil is up, natural gas is up, everything is up in the energy sector. Let's take a look at some of this cool stuff. All right, last week I said, hey, if it breaks this line, this is the 200-day moving average. Below it, you're in a bear market. Above it, you're in a bull market. It's going to go up, and it's not going to go down. So, all right, this is a bearish descending wedge. It comes in, kind of bounces, has a floor, but it has lower highs, and so eventually it breaks down through it. Now, if you take a look at gas, that's what this line was when I drew it, right? We were kind of scared that it hit 58, right? There was a probable chance that it was going to do that before it went up. But oil, as I found, it really breaks a lot of the narratives, okay? A lot of these trades are like 70-30, right? 70% one way, 30% the other. I found that oil really breaks a lot of the times to the opposite side as it did this, right? And it could be forming a small cup ahead of it. If it just chops sideways this way, that's going to be your cup. You're going to have a handle, and then it'll go up even more towards from 69-ish to about 78. So about $10. So you will say 87, 88, it'll go up here. Now, I think it's going to rip through $82 in the next week or so, right? Give or take, possibly this week, okay? Then the next stop is going to be 90. I think it's got a good chance to go there in the next maybe month or so, and then 96, and maybe if it breaks through 96, 120. Here we come, right? I don't think it's going to get to 120 unless there's a geopolitical event, okay? But I think it's got a great chance to get up in the mid 80s and definitely into the 90s. We'll see what happens. We go from there. We'll just keep watching it. But good news for oil interest owners. We got some definitely good movement to the side, and so know me and my partners are going to be enjoying that. All right, here is natural gas. As I said in the last video, when it comes down and tests this, either the gold line right here, it shoots back up, and what it do? It tests the gold line, it shot back up. I mean, if I put in a trade there, I would have made like 10-ish% or more, give or take. So that's good. 50 cents out of $3 30 cents. I'll do the math later, whatever. So about 10% give or take. That would be a great swing. But I have heard that it should get cold. I'm gonna do some research on this. There's another big polar vortex coming, but I will have to do some research on that and get back with you guys. So remember what I said somewhere around here, I think I said that oil comes up, it hits the weak legs of the economy, and the economy falls, and the oil eats itself, right? Well, we see oil coming tracing back up, and we have this.
You mentioned that potentially we have, slowing equities markets, sparking slowing consumer spending. Any shocks that you're looking out for the economy, geopolitically, politically? What's going on here?
Watch oil prices. Oil prices have been down on a year-over-year basis consistently for the last 2 years, meaning that consumers have effectively been enjoying a persistent tax cut, allowing them to consume in other places. And oil prices were starting to rise in a more meaningful way. You do run risk that things like real wage growth, wages after inflation, start to look worse, pulling back household consumption. That should get lower GDP. That should get cuts to earnings estimates. That should get an equity market correction that is led by both earnings and deflation of the multiple. That is a wild card for us in 2025.
All right, that was, she said it fast, but she's echoing what I've been saying. Basically, oil prices come up, people have less disposable income because they are using them for the price of not just putting fuel in their tank, but also the price of groceries and everything else goes up because oil, energy touches everything, right? This then makes it to where companies start to have worse margins, or not selling enough, which makes the stock market go down because their earnings aren't as good. So this is kind of the cycle. Oil comes up, knocks out the legs of a weak economy, and then it eats itself on the back end. And then about 6 months or more, it regains 50% of what it lost. So that is one of my calls for this year, that is going to happen. So let's transition from that into real estate. The housing market is frozen. Oh, no, it's not. Oh, maybe it is. Oh, maybe it's not. Who knows, right? Well, I will say this seems like a frozen housing market because of interest rates, right? We're going to get to interest rates in this. Yes, because of interest rates. We're going to get to these lines in a second here, but interest rates are at almost all-time highs, right? So the last time we saw this was it hit 5% in when? 2006. And then again in 2007. And what happened then? The Great Recession, right? Here we are in 23, 25, and we're going to go over that in a sec. But before we do that, 73% of the U.S. mortgage borrowers currently have an interest rate below 5%. Who cares? No, but these are kind of the golden interest rates, right? These are the ones that are, I would say, between 4 and higher are the ones that primarily should focus on. Now, the important thing to notice is that this side of the pie chart is going to get progressively smaller as interest rates are high and stay high. This side of the pie chart is going to get progressively bigger. So when people keep selling these homes, or maybe these homes, and getting into these homes, the higher interest is going to get bigger, and that means it's going to put more pressure on people's money, on people's pocketbooks, especially when they're buying at higher prices. Interest rates are one portion of the equation, right? But prices are the other, and it's the multiple of those two that really affects the monthly payment. Okay, right now we're at all-time highs. When you buy it at 6% or more, that's going to hurt. That's going to be a lot of money, right? Let's say prices went down by 50%. You bought at 6%. You'd probably be doing better than people that bought at 3% or lower. Okay, as far as your monthly rate goes, I'd say you'd have a win in all because you have less of a loan balance, which we kind of forgot when in 2000s what that was, and you'd probably have less of a mortgage payment too, right? But we're at all-time highs. This side of the pie chart is going to get bigger, and that's going to eat up more disposable income from Americans, and that is going to slow down the economy. 9 states are back at pre-pandemic housing inventory levels. These 5 states are getting close. Let's go. I started this chart a little while ago, but these are the 2020s through 2023s, right? 2021 and 2 and 3. 2024 is way up here. Way up. I mean, in fact, it doesn't even gloss any of the lines over there in these. It just keeps going up. It last time we talked, it was right here. It did go down, but that's seasonal. So it is heading towards 2019, 2017, 2018 inventory, which means prices are going to feel a lot of pressure to stay high. Let's go through, this is kind of a nice chart. Let's go through a different one. Here we go. The greener, the more inventory you have, the browner, the more. So let's talk about this up here. There's not a lot of inventory coming up here. I dated a doctor from this area before, and she was telling me that the issue with the Northeast is that there's literally no land to build. If you're going to build something, you literally have to push something over to do it first, right? So you can't really get cheap land price, or you're always going to have to pay a little more. And people see real estate is so valuable because it's so compact. There's so many people here, right? It's like ants in an anthill in some places that people do everything they can to hold on to it in the family. They'll call Uncle Joe and be like, "Hey, I'm having trouble paying my mortgage. Can you help me out?" And Uncle Joe will be like, "Put me on the title, and I'll do it," type thing or whatever. I don't know. But my point is, they really do everything they can to keep it in the family. Okay, down here in the South, we're all on our own. No, but there's actually a lot of land and valuable, viable land in and around cities to build. Right, so instead of getting compacted like this and having to push something over, you can just go a lot over, maybe a mile down the road, and build over there where it's cheaper, right? Here's another one where it shows all of the some pretty good states: Texas, Florida, Colorado, Oklahoma, Washington, Utah. These ones are hitting 2019, right? And again, you see the northwestern or northeasterns; they're all way down here. All right, this was an interesting one. I do like the gradient graph. It does show really good of the states. I do really enjoy that. And again, Arizona, Texas, Florida, Tennessee, a lot of ones people are moving to are on the tops. But there's one that really caught my attention. That's the 74% DC. Now, look at the numbers. If you added 1 or 2, it would really affect this number, right? Whereas the other states, it wouldn't really do much. Even Hawaii has more much more real estate than DC, right? But here's what I was thinking about. It's DC. There's a lot of politicians in DC and a lot of people that know politicians in DC that probably hold some real estate. Quite possibly, are they throwing everything on the market to try and get on and get it out before everybody else does? I don't know. I don't know. It's just a thought, right? But back on interest rates. So I drew this line here, over here, 2006 to 2007, right? Then I put it over here. And it's the same distance. In fact, it's the same pattern. Up, down, comes up a little bit, down, up, and then way down, right? Same thing, up, down, comes up, goes down, then comes up, and then way down, right? Yeah, it looks, I mean, these are just what the charts say, and the charts can tell the future, okay? What the interest rates are saying is that we're probably going to have another recession, and it's going to start look, this recession started about October or in the fall of 2007, and then it went to its deepest point around, gosh, that was a really good rate, 2% rates right there. COVID, eat your heart out, man. Actually, COVID got a little better. They got to 0%. But this is around where I bought my first house, you know. But it got down to here. 2009 was the best time to buy a house in America in the last recession, by the way. Like, if you bought in 2008, 2010, that was the, you know, the curve that went down. Oops. That was the curve. But, like, 2009 was the golden year to buy it, man. You could, it was so good. If we take this same line and bring it over here to where we're in early 2020, 2025, man, it's like over. And we bring it down, it's telling us that in August, so mid-2026, will probably be the best time to buy real estate, right? Now, I'm going to make a call. I'm going to say sometime between the summer 2026 and 2027, that's going to be the best time to buy real estate, just by what these charts are saying, right? It may be wrong, it may be off, but hey, that is where, that is what I'm going to call, and hey, hold me to it, right? Again, the charts can tell, they can predict the future, so we will see what's going to happen. But if this starts to fall down, and especially if it gets down below here, if the Fed drops the rates down below 3.7%, we are definitely in a recession, because the Feds aren't going to drop the rates unless we are, right? That's exactly what the chart. So scary stuff. Last time it was up here was 23, 2006, 2007, now, and then we're going to head off. So buckle up. All right, let's look at the dollar index. The dollar is strengthening. And here's some of the things that crude is really flying high, because the dollar is strengthening at the same time crude is going up. That means, this is on the weekly, by the way. Let's go down to the daily. Yeah, so the dollar keeps continuing to go up and crude is going up at the same time. That means crude will probably slingshot up, right? Because the dollar puts pressure on everything, including oil, and it's going to slingshot up, man. This is going to be crazy. So hold on to your butts, because once it hits this 112 line or 120, it'll probably bust out to 120, and that's going to be some scary stuff. And again, this is one of my calls. I think it was in the summer of 2020, summer of this year, we're going to have crude was going to go up high and going to break the economy. The dollar the same way. And the second one is in the middle of 2026 to 2027. We'll have the best time to buy real estate. We shall see. Here, Bitcoin. Let's take a look at the BTC. All right, kind of came off from this cup and handle, flew up so high. I mean, look at that. Just, right? It's chopping itself, right? It could go either way. I know some people that are still say it's got a little bit more room upward up to 120, but it's very unsure. Right now, it's kind of building a bottom about 91-ish, give or take, right? But we're gonna see what happens, and coming up, then coming back down. But we're gonna see what happens. I mean, what in the world could make Bitcoin go lower? Well, if someone sold a lot. And I don't know if this is true. I gotta look into this, but This is what I heard today.
Bitcoin crash is coming. Check this out. Bitcoin's price crash is imminent. The U.S. DOJ receives the green light to sell 69,000 Bitcoin, which is about $6.58 billion. And this is what we know so far. The green light to liquidate the Silk Road BTC. So again, all of this BTC was seized as a crackdown of the Silk Road, a notorious darknet marketplace. This is more than 69,000 Bitcoins, and this would send Bitcoin free falling. And finally, after a years-long dispute, they have come to an agreement that yes, the DOJ now has the green light to liquidate its BTC. Don't believe me? Feel free to ask any of your crypto gurus. What would happen if $6.5 billion worth of Bitcoin were to be liquidated? And what a beautiful exit for the DOJ. Almost at all-time highs, $6.5 billion, and I'm ready to short every penny of BTC.
Now, I'm not saying go out there and short it, okay? This is not financial advice. None of this is. But if the government does do that, do you think Bitcoin's going to stay up here? Do you think it's going to hit 120? Right? 200,000, 300,000, a million like people are saying, like all the crypto bros are saying? No doubt eventually hit a million. But I think that might be when we're in our 50s, you know, something like that. It's going to go down before it goes up if that happens. Bottom line, it may retrace back up to like the 60s or 70,000s, right? And then repeat a wave that it did here, right? Comes down, then it flies back up, and then forms like come ahead. It could repeat that. We don't know. We just got to keep an eye on the charts, okay? Or it could go down and could go and test 20,000 again, right? Or 3,000 where it was before the pandemic. We shall see. But there's a lot of people that bought all the way up. If this thing crashes, there are gonna be a lot of sellers, and it's gonna hurt, right? So just kind of FYI. All right, housing insurance, housing markets insurance shock, blah blah blah. Okay, with these, I'm just full disclosure. I am a licensed P&C agent in the state of Texas, and so one of the things I've learned in my career in insurance is that when people say things like this, like we feel it, we understand it, but it's like it doesn't really hit us for another like year or so. In fact, premium rose between 20 and 23. Yeah, it did. Actually, some people it rose even more. I've got some people that are calling our office, and it rose by 250% in 1 year. Right, we're from like 1,800 to $5,000. Right. But on average, just last year it raised up 23%, I think it was, for home insurance. Here's the thing about home insurance, right? It is going up. It is going to be. We had a big meeting last year with a bunch of insurance companies and such, and they said, hey, we think things are going to start to get better and things are going to thaw out and stuff. We're like, oh, this is great. And then two big companies said, hey, we're not going to sell anymore in Texas, and a few pulled out of Florida like 2-3 months later. I'm thinking, okay, we were really excited. Me and a bunch of other agents was really excited. I guess what's going to happen, we might see the thawing out, but that might not be for another year or so, okay? So there's going to be a lot of pain in the insurance industry for a while, for everybody. Agents, clients, homeowners, insurance companies, there's just going to be pain all the way around, okay? Brace for that, prepare for that, okay? And if you're in the state of Texas or you own property in the state of Texas, feel free to give us a call. We can quote you out. In fact, if you're in some other states, I've got friends who are part of our brokerage, and they can quote you out as well, type thing. We shop it around for you, make sure you get a good price on it. But one of the things I want to bring to your attention, I'll put my information there in the bottom for if you want to shop around your insurance. But one of the things I'm bringing to your attention is one of the things I'm working on right now is an opportunity in the insurance industry, right, to invest in it. Now, I will tell you this, I was started part of my career in the insurance industry right before Hurricane Ike came. Hurricane Ike, when that came, it decimated a lot of the Texas coast, right, in very large cities. And I was kind of a new agent, but the guy I was partnered with, he had I think a $10 million book of business, something like that. And after 1 year, we were in a meeting, he looked over the books, and he told us, hey, we lost 25% of our clients because rates just flew through the roof, right? Not as bad as now, but they still went through the roof. we lost 25% of our clients, right? And we were like, wow, that sucks. So if you had 1,000 clients, 1,000 lines, you lost 250 of them. And he says, what do you think about happening with our profits, with our gross revenue, with our revenues? And we're like, I don't know, we're kind of like, oh, this is gonna be bad. He looked at us and he said, our profits went up 15%. And we dropped our jaws and we're like, what do you mean? So what happened was that 75% that stayed with us was the amount of premium that adjusted that went higher, and the commission rate that we got from it was much higher than the 25% that left us, right? And so we were like, oh my gosh. So insurance is a great industry to be in. It is everything you want in a business. There's just one problem: you got to sell insurance, right? That is the only thing that's bad about it. Now, if you partner with me on it, if you join me in it, you don't have to do anything. You sit on your butt. I'm the one doing all the work and managing people. But if you're and this is something we're still working on. So if this interests you, contact me today. But either way, oil is going to go up. Oil looks very good. Natural gas looks very good. The economy looks like it's going to knock the economy down. Real estate looks like it could thaw out, but at the same time, not in the way that you want. It's probably going to the market's probably going to be flooded with houses here, or at least it's going to tick up, especially as rates go up and stay up higher and eventually fall when we go into a recession. The dollar looks to keep strengthening up. Bitcoin could go higher, but it could take a big dump. And so things are going crazy. So that's a recap of the night. I hope your week goes well. If you're interested in a quote for home or auto insurance, mostly in Texas, really anywhere, let me know. Give me contact me. Secondly, if you're interested in the investment side of it, give me a contact. We can talk. Right now, we're just talking. We're throwing things around. We're getting some ideas, and we're moving there from there. Again, this is James and the Giant Economy. Wish you guys a great week.